In the Trading Edge today, Bill Looney joins me now. He is Vice President and Head of Index Options at CBOE Global Markets. Wonderful to have you on the show today.
Thank you for having me. Nice to see you.
Some exciting trading going on here using sectors. Do you feel like sector trading is becoming a hot topic in the industry?
Yes, very much so. We do. In the recent market events, what we were looking at predominantly was broad macro geopolitical type events that were causing the market to trade from a very broad perspective and using our index products and benchmarks. But we're very excited to launch select sector index options on the S&P 500 within our complex, and basically we take the 500 stocks that comprise the S&P 500 and we sectorize them. There's 11 sectors that comprise the S&P 500. Investors think financials, energies, consumer staples, utilities, healthcare, exactly. Real estate as another sector. And this affords investors, especially in a fundamental market, a bottoms-up market where people are stock picking, to be able to place specific bets, underweight, overweight exposure in areas where they think the market could go up or down, respectively.
Right. So instead of just doing a trade in the S&P 500, you pick one of these select sectors. It has a basket of stocks and sort of is weighted in a different way so that you can actually play what you think will be bigger or smaller in the market.
That's absolutely correct.
Do you anticipate large demand?
Yes, and we specifically anticipate demand coming from our European customer base. Due to regulatory issues, they are prevented from using ETF options or ETP options. And the select sector index options, being cash settled, being European style, do not fall underneath that regulatory restriction. So the initial demand for this product and for this complex came from our European customer base, and they're very excited about the addition of these.
That is really fascinating. Tell us about the contracts, the contract sizes, how that all works.
Well, these are standard index contracts, so they have standard specs that apply. They have large notional, they have 100 multiplier, multiplied by the value of the index. They have European style settlement, so they cannot be exercised early. They have cash settlement, so you don't exchange physical shares, you exchange cash, in lieu of your positioning. And there's tax advantages. They fall under Reg 1256, so there's preferential tax treatment, which also applies very much to the U.S.-based investors.
Tell us more about the tax advantage, please.
Well, it's a 60-40 tax advantage, so the positions that you put on within the index are taxed at 60% long-term, 40% short-term.
Any other benefits before you take off?
In the U.S. specifically, the registered investment advisor community, which is a growing customer base for our index segment, they're going to be able to benefit from this greatly as it relates to their overlay strategies. In other words, selling options to generate yield and income for their portfolio and outperformance.
Well, thanks so much for bringing us up to date. Good to have you on the show.
Thank you very much for having me. Nice to see you.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.